Guys, yet more evidence of market manipulation. We're going to dig into it in this video, so let's go.
Trade Genius.
You know, Bob, some interesting things have been coming up, and it looks like there's more manipulation, and I think you got a good handle on what's going on and where it's headed. So can you explain to the crowd what's going on here?
Yeah, and look, normally I don't care about market manipulation, nor do you, because there's always some manipulation happening. But
True.
this manipulation is a little bit different because they're pushing us to the basically the edge of the cliff here with all these derivatives, and they're getting increasingly creative, if you will, to try to find the cash flow to push more of these zero DTE. What that means is, people are complaining we use jargon here. So every day now in the stock market, you can have stock options that are expiring. So market participants can move the price of a stock by buying more calls than they buy puts. And so you're using a little bit of money to try to get a bigger move in the stock market by maybe tripping people in their stops and things like that. So that's been going on forever. But what has changed is now we have these every single day, and the levels in which they are executing these trades are, you can't compare it to any time in history. And the reason why we're concerned about it here at Trade Genius is that, Bob, what's the deal? Prices are going higher. You should be excited. Except that when it stops, and it has to stop, because at some point you just get to a point where the risk managers are saying you can't keep doing this. You're gonna create a big problem. And when they stop, it creates the big problem anyway. And so you could take 1 or 2 months worth of gains, and you can wipe that out in the stock market in 1 or 2 days. And so the latest thing that they're doing, in amongst everything else, is that they're running Treasury auctions now nearly every day, basically rolling over old debt into new debt. Well, they're taking that money, and if you want to flash up that next slide, Phil, is that they're taking that money and they're jamming it into SPY calls. And when they jam it into SPY calls, it basically lifts everything that's associated with SPY higher. All the stocks that are part of that ETF gets lifted higher. And you can actually see it if you want to bring the chart up that shows the Treasury auction, and then you can show the price of SPY moving up and the price of the yields of bonds going down, Phil. Yeah, that one right there. So you can see it, and this is now happening nearly every day. So this is just basically, you ever play the game Jenga? This is just another Jenga log that's being pushed out and being thrown out on top. And you can actually visually see that, Phil, if you bring up the next chart, is that you can see options are increasing on a day-to-day basis, but the average price of the option is falling, which means this is dumb money or retail money that are participating. And what I mean by dumb money, it means money that it doesn't have inside information, and it can become problematic. So what's happening here is they're luring retail in, getting people all excited about stock price going higher. The narrative on FinTwit is new bull market in place. At the same time, Jerome Powell is raising the cost of capital every day. And so the reason why we've been like this is because the shoe hasn't dropped yet. You have any thoughts on that, Phil?
Yeah, I think as we've been kind of relaying to you guys in the last few videos is that, things are not well under the hood. And this actually goes back to last year when they decided to waive, or was it 2021? They decided to waive commissions, right, at the stock brokerages. And we thought, that's interesting. And we also talked about, it seems like they're trying to get retail in for like the final push. And because usually the way it works in Wall Street is you use retail as your exit liquidity, and then you reload, in the big market cycles. And then that's where your large, massive institutional profits come from, typically on a cyclical basis. So it just seems like we're getting to another point where they're trying to just squeeze the last bit of drops of blood out of the turnip. And you're seeing it here now with the Treasury auctions and the zero DTE correlation. And you and I have seen it. I mean, we look at the market every day. And the volatility and the liquidity in the market is getting to what I would consider dangerous behavior levels, just because the moves are getting really sporadic. And it sets us up for, if Powell comes in and lays down the hammer again come February 1st, like he did in November, the drop could be very swift. And I think that's the big risk for the retail investor right now.
Yeah, and what I would tell people is go ahead and Google the symbol XIV and to see how fast your life can change. And the other thing that when Phil used the word exit liquidity, which basically means we're selling to you, you're the sucker at the poker table.
Yeah.
And so, and this is tried and true Wall Street behavior. So we wanted to continue to educate you guys on these things because what people normally hear and see are like, hey, the stock market was up again today. They go on social media, new bull markets coming into place. Powell's going to pause. Powell's going to pivot. Stocks are undervalued, yada, yada, yada. When it is absolutely the complete opposite. Earnings are falling and earning guidance is coming down. Cost of capital is rising, alternatives to the stock market are becoming more attractive, and then you got big economies outside the United States are looking to try to do everything they can to dethrone the dollar. And, we're merely Thelma and Louising this thing right down the path to the cliff. And people need to be a little bit aware of that.
Yeah, no, I agree. So hopefully you guys, just add that to kind of the information we've been giving you as just there's more things that should be giving you pause in this market right now. And sure, things can go up a little bit more, but we still think that the downside risk is very large. And there's going to be a big catalyst event come February 1st with the FOMC announcement. So a lot of times it's better to see what the reaction is post those announcements, and then you can do a more informed decision. But certainly not an area where we would recommend getting leveraged or getting really long this market just yet. So hopefully that helps you guys out. All right, well, that's going to do it for this edition of the Trade Genius podcast. As always, we appreciate it if you could hit like and subscribe and comment below and let us know your thoughts on all this. And we'll see you on the next one. Take care.
Trade Genius.